Welcome everyone, Simon here from the Whales of Wall Street. We have a quant video for you today, QNT on the exchange. Again, I was surprised myself. It's literally been a month since the last one, so a bit of information updates on quant. I just wanted to delve a bit further and deeper into the team really behind quant, or particularly Gilbert, who will watch a very quick snippet from his recent conversation with the Digital Pound Foundation, particularly Helen from there, around what the utility of CBDCs can be in relation to automation and the speed at which finances can proceed over the coming years, and a bit of a backing behind that as to what's behind the compliance aspect, the standardization areas as well, and how Quant have fit in with that, because people always suggest Quant as an overledger, as an operating system is absolutely incredible, but what's the historic background to suggest that why Quant would be one of those really leading projects that we want to be investing in? And it's certainly one that's in my portfolio. It's something I'm building, and we'll definitely touch on towards the end of this video obviously a bit of chart analysis, because we are reaching that $100 resistance and support mechanism area right now. So it's just dipped under as a recording. We'll have a look at a bit of analysis as to where I'm looking in the charts for my limit orders, which have been in there for a long time, and I'm still waiting, but we'll talk about that in more detail. So let's jump straight into this part first. Let's start with the miniature video snippet from the recent conversation between Digital Pound Foundation and Gilbert. I'll leave that for these guys to discuss, and then we'll review that in a second.
I think money is, in its current form, outdated. It's no longer able to keep up with the way we as a society operate so digitally. And we're very complex in terms of transacting between different parties. Even just doing your grocery shopping is a complicated thing today. But the evolution of money into a CBDC means it's programmable, and a lot of the risk, a lot of the uncertainty, and a lot of kind of the manual barriers and the friction that we have today with a binary money system will go away, because you can automate that with the technology underpinning blockchain, such as smart contracts, and you can really tackle a lot of those complex things in a very seamless way. So businesses and consumers can put some logic behind how money should work, or how transactions should be completed, when it's completed. If my builder completes the renovations on time, and it's certified by the conveyancer that it's been done to an appropriate level, and council approves it from an inspection perspective, then you can release the money. Doing that transaction in the binary system is very complicated and quite manual, but you can automate that with a smart contract and a CBDC, and you take that complex equation and program it into money itself, whilst all parties are involved and they're participating, and that way you really get the benefit of automation by getting rid of all those complex workflows.
I think we're going to see so much change.
So one of the key topics there around automation, this is a really big part of the new financial system. Not so much some of the areas that Gilbert just covered. I mean, there's a multitude of applications. He just mentioned something about building work. Well, that can also be applied to simple things like real estate in general. The whole market spectrum of collecting data to determine what house price value is based on all the algorithmic data, rather than someone coming around the house looking around and going, yeah, I think it's valued at this because of this, and the other houses around the area selling for X, Y, Z. But also any application like he just mentioned, which is really interesting because I covered this a couple of years ago. If you had, like, say, an extension or conservatory added, and that is all in regulation, and it was all checked over by the planning committees, etc., that was all good, it would automatically know the cost effectiveness or the value effectiveness of that property that you have, whether it's increased or decreased, based on the materials used, the quality, etc. So you wouldn't have to have that like valued. It would just be added on based on all the information that was provided as it was being done and through smart contracts. So there's all these aspects of here, but in general for the payments, as you mentioned about automation and speeding that process up, becoming more perhaps unique in the sense that it's the verification, the processing could be smoother than it is today. Of course, we use things like BACS payments, we use things, of course, like SWIFT, etc., CHAPS, and all these things are coming to their end, really, to be replaced with the digital alternative. We've spoken about this a number of times with the new RTGS system coming in 2025, or November 2025 is the sort of most recent updates to those timeframes. But that also includes all the other areas that we just mentioned. And the reason I'm kind of pulling that into a conversation here, we know that Quant is very heavily related around interoperability, the ability to connect various and multiple chains simultaneously. Because if you're a business, right, and you're coming into this new financial system or platform that is being built, whichever one that is, you don't be messing about with different apps like we do today already. You know, how many parking apps do we have, and how many different payment apps and all these things. As a business, you don't want to be doing that. One, you don't want to have the resource to be messing about with that, taking time. And two, you want an automated process, right, that just does it based on the requirement, the contractual obligations, etc. Then being, as Gilbert just mentioned in that instance, you can apply that method to pretty much anything and everything. So when you think about all of that, Quant has a unique infrastructure in place where people can build API integrations on its overledger, which is an operating system essentially that they created a few years back to allow all of these different chains to talk to each other. And for enterprise and specifically wholesale, and when we incorporate CBDCs into that conversation, it becomes a really unified ecosystem and a one-stop shop for companies to use. And we know the Quant token is very much used for people developing on the operating system and actually have to use that almost as a license to be able to function on that. As more companies come into the fruition of Web3 and blockchain utility, and Quant being one of the giant leaders of that, the Quant token, obviously its value will increase because it's being used more and taken out that's circulating supply or maximum supply aspect that we've got as more and more licenses get taken up. So we kind of ask ourselves, well, how has Quant got to where it has been? What has Gilbert been up to over the last 15-20 years? His historic background in business is absolutely incredible. He's worked throughout various different financial institutions, particularly HSBC, I believe, in the past. He's worked heavily in the government levels through the Treasury of Her Majesty's Treasury at the time. Of course, through Downing Street, Ministry of Justice. There's a multitude of areas that he's covered, and particularly in cybersecurity, automation, finance industry overall. And one of the big things, the standard, the ISO 222, I'll get it right in a minute, is of course a development that's come into fruition about the standardization of messaging, of financial messaging moving forward. But if you scroll back a bit further than that as well, you've got the ISO standard TC307, of which Gilbert is one of the leading founders and members of that standardization, that is incorporating blockchain as a regulated and standard across the board that people have to adhere to, or companies have to adhere to, if they're creating a blockchain and need to be in this new financial structure. So you've got complexities of all these different standardizations. You've also got the DLT aspect, DLT1, which is currently going through the BSI programs. This is heavily related again to being regulated to be a major standard, but not just in finance, across a multitude of opportunities within tokenization, within asset demand. Here, for example, we're talking about legally binding smart contracts. We're talking about interoperability, big things we've already spoken about in this video and previous ones before this. Also other things mentioned in here about carbon credits, the utilization in the energy sectors, the health sectors. All of these things need to be ticked off as these forums build. I mean, some of these have been going on for a few years now and still not published, which is quite crazy, really. And these continue to be developed. They continue to be, tested, piloted across the world through multiple functions of banks around the world, governments at that level as well. We know there's a lot of work going through the European Commission right now, particularly with Quant Network and a multitude of other projects that we cover, like Energy Web, for example. And when you start doing dot connecting and understanding that actually all of these guys are part of the same infrastructures, part of the same forums, the same standardizations, whether they're board members or founding members, this is how it all comes together, guys. Because when we start building this conversation and around the new RTGS system being replaced with chaps and backs, etc., as I said, the latest pipeline here is to complete a lot of this by November 2025. We know that already this is being installed, if you like. We can call it, if we're talking about operating system side of things, you imagine when the old days you used to have to get all the CDs out and stuff to start up Windows and get it installed for the first time. You could argue metaphorically that we are in that process right now where we're putting the floppy disks and the CDs in, and each floppy disk is adding a bit more information onto the system to go, we're nearly ready. So if you used to remember, or for those that don't know, when you had like four to six floppy disks to install something, we're probably on like maybe the third one right now. So we're very much in the middle of the process being completed. Very close. Obviously, it's not far away, guys. It's like a year and a half away. And Quant is going to be one of those giant organizations that is pulling a lot of this together. So these guys and Gilbert in particular has massive integration across the board with all of this. And it's really important to really identify that even things like this, with Pay.UK as an example, this is where we've got the guarantors. They're all banks, but there's one in here that's listed particularly of interest because it's not necessarily a bank, albeit that it could be argued that is massively incorporated with them. Quant is sat there. And this is just within the UK system of pay. This is how all the systems work, especially within a retail remit, if you like, of how payments are formed, structured, and basically completed, verified, processed, you name it, it's all on here. Quant has a significant part to play in this, and is on these boards, is on the infrastructure of the new financial world, particularly here in the UK, and it will be doing that across the world as well. When we talk about interoperability, cross-border payments, it's going to be one of the front runners here. So with all of this going on, we can really start identifying the utilization of Quant and its token QNT in particular, when we look at all the different companies, the different banks that are now jumping onto these ISO standards. They're jumping onto particularly the ISO standard that Gilbert is arguably the author of, in terms of blockchain compliance and standardization as well. And people go, oh, well, can I save money doing things through blockchain and smart contracts? Okay, great. How do we do that? Oh, we need to utilize an API gateway. Well, how do we do that? Well, we go through one of their partners like Oracle or something, or Nexi as an example. I mean, these are huge companies, by the way, guys. And as I said, covering the whole global spectrum of everything. When you start looking at cybersecurity, cloud servicing, cloud data storage, all this stuff that Oracle is absolutely massive for, of course. This is when it starts really getting exciting, and we go, okay, cool. Who are the big players in this space? And we know there's a few listed as ISO 222 compliant tokens. And I said to people, don't get too bogged down by that. There's going to be a lot of attention around it. But first of all, just understand this is a messaging standardization. This doesn't necessarily mean that all crypto tokens have to be used on this standardization. If it's not on there, then it's not worth holding them because it's not regulated, blah, blah. It's not really anything to do with regulation. It's about the standardization, particularly in the financial markets, which is obviously one of the, if not the biggest market in the world, of course. We're talking about multi-trillions of dollars going through this system regularly around the world. So, of course, you have to have very, very significant infrastructure in place and standardizations to ensure that that's legitimate wherever it's being used. So when we pull this conversation around ISO TC307, again, you can see here, representation of physical assets and non-fungible tokens. We talked about that a million times. Carbon markets, absolutely huge market here. Smart contracts and their applications. Gilbert's just literally spoken about that in the video that we just watched. We talked about governance and DAOs, interoperability, you name it, it's all on here. And for this all to work, people want trust, they want confidence, and especially at wholesale, very big, large business level, you want all of that, you need all of that. And this provides that when you look at the ISO standards of this. So when we're looping this conversation back in reversal, we're sitting there going, well, why is Quant there? Well, we know Gilbert's got massive influence in these areas, the communication, the networking opportunities, the partnership opportunities. But now all of a sudden, all these corporations, these banks are coming to Quant and their partners, their integration partners, which mentioned a few of them, to start utilizing this and start realizing the benefits of this, because it's coming whether we like it or not. CBDCs are coming whether we like it or not. I know they put their surveys out for the public, which hardly anyone knows that they actually exist. And by the way, that runs out next month, particularly here in the UK. We know that they look like, or want us to think we have a democracy in this world. Democracy went a long time ago for the general public, let's be honest. The control methods, etc., is another topic. But the point being is that irrespective of how loud we shout or how many protests and banners we could hold up in the street, albeit in small numbers, this isn't going to stop. This is coming. And more of the wholesale levels, as I was at the Digital Pound Foundation event the other week, as you guys know, the Bank of England, head of technology of Swift, all of these guys there, they're talking as if it's pretty much here now. Like, there's no doubt about it. You can't stop it. It's in full fruition, full piloting mode. They would not waste time and energy and certainly money on this if it wasn't coming. And it's been in play for a long time, way back. We showed you the information in one of the previous ISO conversations that actually these conversations were going on in the 90s. The development of blockchain came about, and particularly with the utilization of Bitcoin back in 2007, and around that sort of area, there's a lot of trials and conversations going on around then. And that's arguably when Gilbert started getting really interested in it. And of course, through that period of 2010, especially to 2017-18, was some really conclusive information coming out that actually a digital currency in the formed unit of a national currency has giant benefits if it's programmable. And a lot of people are like, oh, is it going to be programmable or not? Well, of course it's going to be, and it needs to be in order for them to use this kind of infrastructure. Smart contracts, automation, of course it has to be programmable. And that's why the API integration is very important. And then we loop around to the fact that actually Quant is so far ahead of the game with its interoperable aspect to it. Its ability to now go to companies, go to huge banks, go to governments, go to European commissions, world commissions, what you name it. They've got the system here to go, actually, you guys just need to come through our gateway and we'll sort out the rest. That's what the operating system was built for. So that is why, or certainly some of the major reasons why I'm behind Quant as a project, and especially the token of QNT. These price fluctuations, of course, come in two variables. One is how much it's being used or utilized within the companies that are using it as its license fee to use the operating system. But of course, because it's on the public domain of exchanges that we are able to buy and sell, fortunately, at this moment in time, we can start considering a few variations of information. We can start saying, oh, partnerships are coming in, or they've just announced that we've got a new integration, and you could consider that, oh, they're going to need a lot of QNT tokens for that. And you could potentially see a bit of hindsight on that aspect. But the overall picture right now, and what we'll go into in a second, is that actually, of course, there's loads of QNT Quant holders like myself that can arguably dictate the market itself as well, the price of Quant. So this is where it gets very interesting to buyers on various levels, because, and let's go into the chart right now actually to converse this a bit more. The current price point of Quant is $97, so we've dipped down below that $100 mark. My point being here is that if you're a company, of course, you might get some form of promotional offer or something through Quant directly. I don't know. But the principle being that in the ideal world is that they would be buying it based on market price like the rest of us. So you can imagine many institutions going, yeah, cool, we'll use that, but the Quant price is a bit expensive now. What are we going to wait for? That actually some of these big companies could be waiting down at these lower regions, and we marked some of them up before in previous videos. I've still got my buy orders at $87, and I've still got a big batch down here around 64, and even at the 44 level still as well. Number of reasons behind that, which we covered in previous videos, and I'll reiterate quickly right now. We see these huge gaps of areas between support and resistance lines. For me personally, there was not enough data, particularly around this particular area of $94, $97, to suggest that actually there's not enough data points to say that we're going into a support level and move upwards. So there's some really interesting areas. We're seeing one potentially coming to fruition on my limit orders anyway, around 87. We'll have to see how the next few days play out. But certainly on a fib retracement levels, you can see that there's a bit of a gap building here. But as a company, if I was to use QNT to start using the API integrations and the operating system, I'd be sitting there going, well, I think I'll just wait and see what happens and hopefully get them at lower prices. And when that happens, you tend to get a very quick switch around. So again, that's a combination of retail investors like ourselves, but Quant has a good uniqueness to it. And I'm sure many institutions buy multiple different assets, not just Quant. But in this instance, there's a really big use case and argument to say that actually we could get big, massive fluctuations of upward trend. Certainly when big bull cycles kick in as organic movements, we'll also get an acceleration because there are companies actually needing this token to use this token. So as I said, as an investor, you're kind of buying and selling in those remits as we tend to do, but there's a utility here that really, really requires the QNT token for them to be able to work on it. So as I mentioned previously, the companies trying to build on this will need to be in this infrastructure to arguably increase their economic upturns, reduce costs, reduce people potentially, who knows. We'll be keeping a keen eye on this, which is why all these variables, all these different avenues are so exciting to me as a Quant holder and why I hold it. I think it's truly an absolute gem in the making. Some people shout out about $1,000 price points in the next bull cycle. Absolutely possible. We've certainly been up some higher regions in the past, particularly and notably back here in 2021, if you remember Quant going towards the 440 mark. I mean, in the long scale side of things, in the next bull cycles, we could be seeing upwards towards $2,000 potentially. In the long run, in the next 5-10 years, that could be around the $10,000 mark quite easily, as you get the entry level companies joining in, or the early adopters, as you do with retail investors. But if you look further ahead, guys, in the next 5-10 years, imagine all the big corporations need to catch up and go, oh wow, we need to actually get on this now and actually sort this out. That's going to see more demand, and of course the scarcity of Quant, implications coming in, and then the price of it obviously flying upwards as well. So they're the kind of combinations I want people to think about when we're talking about this, because there's so many things to consider as to what really defines the price point of these kind of projects. So in terms of the analysis of the chart, as I mentioned, we've broken that $100 mark, guys. I've still got my orange mark here at 91. That was a really key area for me, and to confirm that again to you guys, we've only got really 1, 2, 3, maybe 4 support levels around that $95, $91 mark. So that's what we're heading towards at the moment. The RSI on the 14-day is 29, very low. It's a very good DCA opportunity. The 28-day is showing 36. Again, really powerful, strong bite point for me personally, and I have been buying some manually at this area, but my big areas of orders are still around this 87 mark, and as I said, the lower ones at 64, and I think I've got one at the lower regions again at 44, purely because of the data of Quant, in my opinion, of the lack of data or the lack of support areas at these kind of areas. So that's why I've had them in there, and I still have been anticipating very patiently and very very much in a difficult way. It's very hard to be patient sometimes and not let the emotion take over. I've been waiting patiently for these lower areas. So selfishly, I'm kind of going, oh, I hope that it comes down to these areas, because I just want to accumulate as much quant as possible. So let's keep an eye out for this. As I said, we've just broken this fib level here, which is on one of the medium term ones, which is one we drew quite a while back as well. If that breaks, which it has done, we start looking at more minute detail of where we could go with the next moves. And I'm going to just take one of the most recent high and lowest points here, just to give maybe a bit more reflection on that. So we're looking really potentially at that $90 mark as a lower trading area in the coming days. That's provided that we're not seeing any more confidence coming in this short period of time, because this could obviously easily turn around and get back to that 100 mark and support itself there, which has got a lot of resistance, to be fair, at this moment in time. It has dropped a couple of times, certainly in 2022, but pulled itself up really quickly. So we could see a repeat of that. And that really confirms again my theory behind the $87 mark, that actually we could come and see these areas again, maybe even at 94, as we saw a spike down here, which was on 14th of November 2022. So keep an eye out for this one, guys, because there's some great DCA opportunities here right now. The performance indicator on the right side is obviously suggesting, as with most markets at the moment, there is a downward bear cycle trend going on. So keep an eye on that. Great opportunities can arise from this. And those that are short-term traders, we have seen many times with Quant that big fluctuation of $10, $20, $30 at a time over a couple of days period. So if it does swing around, we could see some confidence kicking at that 100 mark and then shooting straight up to the 120 mark over a couple of days time. So this is the opportunities that we have to sort of assess, especially with the risk assessment. That's why DCA is interesting to me. I'm a long-term holder of Quant, but I fully appreciate I don't want to be buying Quant at $200+, which would be a bit crazy when we've got these opportunities at lower regions that we have today. So keep an eye on it, guys. That's all I'm going to say really for this one. Hopefully there's been a bit more detailed information about Quant and some of the reasons why I'm so excited and interested about it. Bit of dot connecting going on, and the realization that actually how powerful Quant can be, not just as an operating system, but its influence in the space and its influence in the financial markets moving forward, as well as the integrations of technology as well. So guys, I'm going to wrap that up there. Thank you very much for watching. We'll see you in the next Quant video. Take care and bye-bye.